Alrighty. Good morning, good afternoon, and good evening. It's Doc from North America. It's a Monday. Monday. So we're starting the first full week now. You know, we had 2 days of last week, January 2nd and 3rd. Here we go with January 6th. So they confirmed President Trump today. What else we got going on here? Mr. Trudeau's talking about resigning. That's interesting. Hey, Robin. And let's see. Did we get that up there? Let's get this up there. Two. There we are. And you can see here's Bitcoin this morning. You know, the markets overall, what you have to do, you don't have to do anything, I guess. At least in the United States, you're not supposed to have to do anything. But in the end result is that the markets, when trading markets, it seems like ever since quantitative easing, not seems like, it is. Ever since quantitative easing, there's a whole different way of valuing things. It seemed to start with the tech bubble of 1999 going into 2000. That seemed to start the change. We started to look the way to value profits and losses on stocks. And let me put it up on the screen here even. Let's see if we can put it up on the screen here. And they had a cute little name, EBITDA, Dibida. I know, it sounds like I'm making a joke. And it was an accounting thing. Let's see. Accounting. I want to put it up on the screen. This will explain in many ways why technical analysis has become so much more accurate and so much more dependable. It not totally, of course, but it is it's gone from say 15-16% using it to 60-70% of money managers use it now, maybe even more. So let's see, accounting. I want to put it up on the screen itself. EBITDA. Let's see. I guess it's EB. EBITDA. There it is. Like that. Let's see what it does in here. Okay, now. Then Dibida. I believe Dibida. Let me just put this on the screen for you first. Go like that. Interesting. Here it comes. We're going to put it right here. Matter of fact, we'll just minimize that for the moment. Because I'm sure a lot of people out there go, what the heck is he talking about? Here it is right there. Earnings before interest, taxes, depreciation, and amortization. Now, there was a time where earnings, profit and loss, and was just, it says it right here, a widely used measure of corporate profitability, which stands for earnings before interest, taxes, depreciation, and amortization. And then there's a DIBIDA. Yeah, there's a DIBIDA. So if we go like this, let's see if we go like this. We'll go like that. Copy that. And these things, let's see. Just move that over one. I think it's interesting because, Robin was saying to me on Friday, there's DIBIDA. So that, you need to explain more. Let's see, EBITDA and DIBIDA. Why didn't it show me DIBIDA? It's just one. It's like depreciation again, I guess. Let's see. We'll find more of it. We'll find it in a second. But EBITDA is the big one. They all pay attention to it right here. And some claim when you do EBITDA, it's a little bit stretching it. It's not a bad idea. Earnings before interest, taxes. Now that's why they put that in there and they started following it, is because tech stocks and the tech bubble back in 99 and 2000, interest had a major effect, or has a major effect on tech stocks even to this day. That's why, as the interest rates had risen, it had an effect on the tech companies. And then taxes and depreciation and amortization. Again, politics. Two things kick in here all the time, and that is, there's three things really right there. Interest, taxes, and depreciation are all, and amortization too right there. Now that means that you bought something for $100 as a company, or let's say $1 million, and you can only deduct 100,000 of it. And then next year you can deduct another 100,000. And then next year another 100,000. In other words, amortization is being able to deduct what they call capital expenses and costs. So, and Robin was saying to me on Friday, he said, you need to basically explain what we're doing here. We should explain what we're doing here. So what you see here is you see, our algorithms on a weekly basis right there, and on a daily basis right there, correlating with the bar chart itself right there. Let's move it over a little bit like that, so it looks like that. There we are. And widen that out a little bit. And so that's the whole story. And you see the green dots there. You see we're above the zero line here, and you can see we've been working our way across the zero line last week right there. And now it's jumped across it and is showing strength. Now this is Bitcoin. I thought I'd show you Bitcoin. And so when you take a look at finance in the modern era, and I don't know if you could say, have they been doing this for 10,000 years or 100 years? Because remember, after the U.S. Revolution in 1776, we started to trade stocks and bonds. It was something that the population was never allowed to do. Only I guess you call it the royalty and the cousins and the uncles and the aunts, they were allowed to invest in government bonds or maybe some type of private sector bonds, but nobody else was allowed to do it. But then once America became free from the king, everybody was allowed to do it. The guy down the street that had a farm, or the young fellow who just got done school and thought he could figure this out a little bit smarter because he was good at math compared to somebody else. And so then we come into the era of the internet bubble, and that is in 2000. And there was speculation that we were going to see a world that was way more connected physically than ever before. So now somebody in Japan could go and buy U.S. stocks on their computer at 8 o'clock in the evening, that type of thing. Somebody in India, in Mumbai, that wanted to do the same thing could do the same thing. And somebody in Frankfurt, Germany could do the same thing. And we could buy something of theirs. And the internet, and then at the same time, not only just financial buying, it moved into the category of commercial and retail. There was, you could buy, plane tickets, you could buy TV sets, you could buy radios, you could buy clothes, jewelry. It was all like part of the revolution of the home shopping network back in the 80s, which is a great example of a company built out of something that didn't exist, 6 months beforehand, is now $1 billion company 6 months later. It just a phenomenal thing. And that was all part of the internet bubble situation. In other words, they were like Amazon was trading at $200 a share or $199 a share at all-time highs. And at the same time, it had no earnings. None. Zero. But it had EBITDA. It had, before the cost of interest and taxes, it had what they called cash flow, the EBITDA. And that automatically, that cash flow, wasn't going to go away. People were going to buy, and they had more cash coming in than they had actual earnings itself. And they said one day one will catch up to the other if it's a good idea and people want it. And if it doesn't, then it'll go bankrupt. And obviously it was, a good idea. Amazon's now the second largest company in the world, pays a dividend. In many ways, it's something like a utility where you have so many people using companies like that. So, and Robin was saying to me, we got to kind of inform people a little bit what we're doing here. And when we look at all these products every day, we're not just looking at charts, and we're looking at the algorithms. In our case here, it's our synthetic consciousness that's reading all the little movements in price action, price discovery. That's what mainly everybody in the financial industry, since 1776 has been looking for price discovery. Why does it trade at $20 versus trading at $10 versus at $50? I know it sounds a little odd or very alien because you don't hear people talk about price discovery on the financial channels much. You don't even hear earnings. When you do, you used to be you would hear these things so much more. You would be looking at inflation. You'd be looking at all the math that had an effect. And so here we are this morning, just starting off, just saying, hey, this is part of the spectrum. This is part of the landscape. And when we look at our charts, those numbers, we really do believe in EBITDA and so forth, are built into the top chart right there. The price, that's the price action. That's Bitcoin. Bitcoin this morning, is trading at, let's see, what is it trading at? It's trading at $99,063. And the high today is $99,765. So it's basically about $700 off its high. And it closed on Sunday. Remember, this is Bitcoin itself. It closed at 98,314. And on Friday, there's Saturday, but on Friday it closed at $98,100. So it's up, about $1,100 right now. It's been bouncing around like that throughout the weekend. You see, we're going into, in this case here, it had slid into the weekly sell. This is the beta, and the beta, pushed it into a sell up in here in the $108,000 area, and we moved into the sell, and we were in the sell for like the last 3 weeks, and we're starting this week here now, and we were in the sell coming in last week, but we were in the daily buy right here. We started the daily buy on the 1st, on New Year's Day, right there. We went into the daily buy right there, and then the weekly started to jump up. You can see it right there. I'm flashing it there at the bottom, I think. Can you see that? Yeah, you see the little flash there. If I go like that, you see it highlighted more. You can see it was jumping up, trying to get into the buy last week, and now it is in the buy. It's above it, and looks like it should hold for the week. We did have some interesting things when we were looking at soybeans. Soybeans were fighting to stay in the weekly buy all the way up until Wednesday. Again, it's a holiday week, so we don't take them too serious. But then it rolled over. So there's a great example of, when we go and look at stocks, we can go put a stock up there, which has even more of an influence, the EBITDA and DIBIDA and all the taxes and appreciation, Intel or General Motors or Siemens or British Petroleum or, IBM or Nevada, any of these companies, they have to pay taxes. They have to, they have to have earnings, to, so forth and so on, to be a viable company. All right. I just took a sip of the tea after talking for 15 minutes there. All right, that felt good. All right, so that's where we are looking at these charts, what they mean. Matter of fact, I think we'll make today's title today is EBITDA, markets, and price discovery. I think that will be our title. Matter of fact, I should text that in right now so it makes it easier for me to not forget it, because Doc can get out there in Cloud 9 there. So let's do that. We'll put that in there. There we go. I'm going to put in there price discovery. Let's see, there it is. Title. Jan 6th. Price discovery. Let's see, discover. There's no V in there. No, we get that V in there. Let's try that again. Let's find it up in here. All right, we're going to put that in there. Does anybody have any questions or like to look at any particular product while I'm texting that into the headline today? Come on. There we are. There we go. Ta-da! Finally. Alrighty. So I think that's the magic of trying to describe what we do here each day. We do price discovery, and we do it through a mathematical consciousness. Let's see, discovery, there it is. DIS. There we go. And let me put EBITDA on there. Let's see, price discovery, algo, and EBITDA. Let's see, let's put the EBITDA up there one more time. Good old EBITDA. We'll make that all capital so everybody goes, oh, okay, I know what that means. We don't really pay attention to EBITDA unless I'm looking at a stock just to know where the money managers have their head. In other words, that's always very helpful. There we go. And that's trading stocks. So, I mean, it's pretty much... There we are. Ta-da. I think that's a great headline, too. So, from there... From there... All right. So we've basically said to you, we look, when it comes to stocks, because you can't really find it in, commodities and gold and so forth, and currencies. It's hard. Currencies... In some ways, you can interpret it, but not really. Not really. But when it depends on the type of company and how they're going to be. It depends on their currency demand, supply and demand situation. But more than likely not. In other words, like banks and so forth, and depending on the type of bank, if it's an international bank, obviously not a domestic bank, things like that. But overall, it's the algorithm. And that's, let me do this. I think I want to save this, too, because this is, let me just save this. Where can we park it? Bookmark bar. Why not? There's a good place for it. Woo! Let's do that. And we'll move that back into a small little box like so. And gone it is. There we are. All right, and so that's where we're at. And then obviously the news that affects earnings in companies, news that affects taxes in companies, news that affects inflation and rules and regulations. In other words, sometimes Robin was saying to me, "You seem like you're talking about the government more," and it's like, well, government when it comes to the stock market. See, Robin was raised, I guess you could say, in the financial industry of the futures contracts, traded eggs, traded the S&P 500 futures contract, traded, British pounds. He traded hogs. He traded wheat, cattle, mostly cattle, the meats. Later years, he did the softs, coffee, cocoa, cotton, and sugar, things like that. But overall, he was from the commodity side. So that's a lot. That's weather that affects things and so forth, and obviously tax law. But weather in particular, and supply and demand, and what other countries are treated like companies. So in other words, you're watching what's going on in Argentina or Brazil. I think Brazil is the second largest, or they produce as much soybeans as we do. That type of thing in the world. So they act like companies when in fact they're countries. And then obviously when you're looking at companies, then it's a whole different story. Just like I was mentioning on Friday, there are more German cars manufactured in the United States than they are manufactured in Germany. So, that, and so you have that type of event going on. They were trying to route around the expense of labor and taxes and inflation and growth and amateurization. All the magical things that move stocks on some level or another. All right, let's see. I don't see anybody saying anything on the chat line, so Monday morning has become a little tough morning, I guess, somewhere along the line. All right, now, so let's do this. Let's shoot over to the dollar index. You can see there's Bitcoin. So you see Bitcoin being firm. Sometimes the dollar follows it, and sometimes it doesn't. And in this case here, obviously it is not, because it's strong. And when we go and look at... excuse me, still have a little of that cold from last week. When we shoot over to the dollar index itself, there it is right there. And you can see here the dollar index is, taking a dive down this morning. And at the same time, we go and look at the bond market, interest rates. I know like I said, it sounds political. And Robin was saying to me, try not to sound so political. I said, I don't have a choice. These things are run. They're controlled. They're manipulated, however you want to talk about it. They're controlled by the government all the time. Now, you can see the bond vigilantes have turned the market around. That you can see the low this morning. Let me just make this a bigger screen. Here's the chart. They had it down. It was heading down up until about a half hour ago. And it was minus. And as the webinar got going, it's turned back up. Now interest rates are, so you can see basically the bars have been moving down, which means interest rates have been rising. And that's why we saw the dollar index moving up. But this morning we see the dollar index getting knocked down, and that's because interest rates were rising, and it made those lows there. So chances are we're probably going to see some shift, and we're going to see the dollar start to, with interest rates dropping, the dollar index itself is trying to tell us that interest rates may be trying to come down. Let's put it back up on there. Interest rates are trying to come down, and when interest rates go down, the dollar loses value against other pairs trades. And so, there it is right there. And we'll just amplify that. See that big dip? That was when the bonds turned around, and all of a sudden, this morning it was up above yesterday or Friday's close right there. So you can see some action is coming in right now, and the stock market too. 2 hours ago, this stock market was trading at what was it? It was trading, about Dow Jones Industrial Average was trading at 10 or 15 or minus for a while. Now it's up 165 points. So we're seeing some strength kick in to the marketplace like that at the same time. Let's take a look at the euro this morning, see what they're doing. There's the euro. You see the euro has made a spike up. So some, obviously some news came out about something. I don't know if it was the Trudeau news or, what is exactly exciting the market. But obviously something has happened. Oh, Trudeau is out. Oh, likely to resign this week. Okay. I don't see any particular news. Dollar tumbles after. Oh, Washington Post says Trump aides mule dialing back on universal tariff plan. Ah, okay. So that was about 40 minutes ago, 45, 50 minutes ago. We're going to put that up on the screen. Let's see if we can do that. Let's go like this. Instead of there, let's put it up over here again. We're going to take one of these, move it over like so, and put it up on the screen so it's even clearer. Let's see. Where's that? Where's Zero Hedge? Markets. No, I don't want to import them. Not there. We'll just type it in. There we go. That's Trudeau. That's what they're talking about. He's going to resign. But here it is right here. Dollar tumbles after Washington Post, which is the newspaper, one of the big newspapers in Washington, D.C., says Trump aides dialing back on universal tariff plan. All right, so that put a charge into the market. Interest rates dropped. Dollar fell back down. So the dollar slid on Monday after reports emerged from President-elect Trump's aides are considering a revised, less strict tariff plan. While Trump campaign promised a universal tariff on most imports, the new proposal would focus instead on imposing tariffs specifically on critical imports. According to, well, I heard Trump's mention all that before. I don't know. Sometimes they like to pretend they only hear one thing. They don't hear everything he says. Citing 3 people familiar with the plan. I think Trump's been saying that all through the. Matter of fact, they refer to it as. I'll tell you what they referred to it as. They refer to it as, reciprocity. That's what he called it, reciprocity. So in other words, if a country puts 100% tariff or 60% tariff on our cars, then we're going to do the same to them or something close to it, whatever product it is that matches up that they sell into the country. In other words, that was the whole idea. So, for them to act like this is new, I don't know why, but again, humans are simplistic people to begin with, simplistic creatures. So that's the reason why all of a sudden, the euro goes flying up against the dollar. The bonds all of a sudden change direction from increasing interest rates to dropping interest rates, which is interesting. It's amazing what money managers will take serious, and they're like a flock of birds. They all fly in the same direction. They don't want to be miscalculated, I guess you could say. All right, so from there, let's take a look at the British pound. No, did we even look at? You can see this. Just the daily is trying to leap up here. Let's grab one of these cells. Let's put a new cell in there. There we go. So it went into the cell 3 days ago, right there. You can see it on the spreadsheet. Let's get rid of that story there. Also cancel that and go like this. Bring it back to home, and then we'll stick that on the bar. Done. There we go. And this way, we can go like that. And there it is, Zero Hedge now. I just thought the whole idea is, just be a little bit more explanatory since we're beginning the year, and we have our algorithm that we've developed. It's a I call it a math consciousness, and because it does characteristics like consciousness itself, compared to AI is more like an encyclopedia or a dictionary. So. All right, and so, in other words, it changes much faster than an AI would. It reads things faster. Now, how about that? There was no buy put in there when it went into a buy there. I guess, okay, maybe, yeah. So that should have been a buy into a sell. Let's put another one of these lines in there. Sometimes no one looks at the charts. We don't have any clients looking at these charts. And when they're not looking at them, then sometimes we don't necessarily update them so much. Will that do it? Green? Nope, that's not it. Cancel. Let's try that again. There we are. So we go in the sell here. We're in a weekly sell all the way back in here. And this is the weekly algorithm looking at every week, reconfirming, that it's in a sell. Tried to get into a buy a couple of weeks ago, with this upwardly push. Didn't seem to do well. But then again, this is the holiday period. So a lot of, technical analysis and trading and everything else is usually a little skewed for this time of the year. Matter of fact, I got like 3 green dots on a volatility signal last week on Monday, Tuesday, and Thursday or something like that, or Tuesday, Thursday, and Friday, something like that. We got volatility signals, which is means usually the markets are stalling out a little bit, not necessarily going down or up. Just it's a corner, like as if you're walking down a street and you come up to an intersection. We're coming to an intersection. It has the potential you could go forward still, go left or right. Means we're at an important point. And so if we slide into a weekly buy right around in here, chances are we're going to start to see some strength coming into the euro, and we're going to see a weaker dollar. That's what this was in the stock indices, not in the currencies. I got a signal last week telling me that things are coming to that point now where we're coming up to an intersection. So we'll see how they play. And this morning they're doing a pretty good job of lifting the markets up, especially over in the tech industry. Lower interest rates and things like that really do have a major effect on tech stocks. So, all right, let's take a look at British pound. There is the British pound. There we go. And so there's the British pound. It's doing the same thing. As a matter of fact, it's coming up to that support line that we've talked about, how it's rotated underneath it and lifted back up. It's trying to climb into a buy also. And you can see on the spreadsheet right there, you see it's 14 weeks in a buy. You see right there, 14 weeks in a sell. You can see this is 15 weeks in a sell. And you can see we've been in daily sells for both of them. 4 days for the British pound, 3 days for the euro. Is that right? 1, 2, 3. This would be a 4th day. Where's British pound saying 4? It should be a 3 in there. And then I guess maybe I reversed it. Let's see in here. I put those in by hand calculations looking at the charts. Yeah, so that's also 3 days. So both of them are 3 days. Not 4. It's a 3. There we are. And looks like both. If the markets stay this way, we're going to see strength start to come into, the currencies, and dollar will be weak. Now we need to see that weekly turn also. But the short term, we always watch the daily, which is this bar right, this chart right here in the middle, with the bar chart. And if it goes into a daily buy, then it's, the idea is to put on some neutral spread situation if you're short. If you're just trading the up and down. If you're a company or a bank of some form that needs to use currencies, then it's a whole different strategy, utilizing options and so forth. And we could always explain that if anybody cares to find out why. I try not to scare too many people with the word options. Let me take another sip here. That's good. After another 15 minutes of talking, makes my voice feel a little bit better, and my throat. All right, so there, take a look at the Swiss this morning. You see the Swiss backing off after, what was it on the Swiss? It's been a while here. You can see that. There's the Swiss right there, 14 weeks in a buy. When it's in a buy, it's losing to the dollar. You see, it's been 18 days in a daily buy in 14 weeks. So it's been, it caught that whole move right here, and we're going into a sell today. And you can see the weekly is trying to curve. It's overbought up in here. When you have the green lines or the blue lines or the histogram getting across these golden mirror imaged standard deviations of our math, what happens is that you see it's like a standard, it's a standard deviation, and you can tell, well, these things are trying to top out. They're high, just like it did right there. You can see it got high, but didn't get low enough. In other words, it had some weakness. The dailies protected you, kept you not long, and at the same time, since we were in a buy, every time we did get a buy signal, you could play the buy side, but not the sell side. You protect yourself with a neutral position. And so then you can see here we were in a buy, and obviously it told you to be long throughout this period right there. All right. How about that, Robin? Did that all make sense? I know that's what you were suggesting on Friday. Did you did that all come out the way you were hoping it would come out? That explanation, and that's why we're going to use the title today of Price Discovery, Algos, and EBITDA. Another sip. That was good. After talking for 40 minutes. Makes my throat feel better. Good. A smiley face. I like that. Excellent. 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 All right. Now from the Swiss, we're going to go to the yen. I think they opened up today. Yes, there they are. They're open. You can see the pressure on it there on the downside. I guess we went into the sell. Let's steal one of these sells. Went into the sell there, and it's been in the sell since. It couldn't get into the buy, with the holiday and all like that. But we're in a weekly buy. Now the trick is to watch to see how this curves and starts to move down. I mean, it's pretty high up. The 40-year high is in the 62 area. Let's take a look at on the beta, our beta platform, and take a look and see where the Nikkei closed last night. Here it comes. Let's get that up on the screen. There we go. All right, there it is. So the stock market in Tokyo this morning, remember, you can not remember, you don't have to remember. Here is December 27th. There's December 26th. There, there's the Christmas right here. They closed the markets on the 27th. They opened them on the Monday for New Year's. And then they were closed from Monday of last week to today. So they were closed for Tuesday, Wednesday, Thursday, and Friday, and then the weekend. So you can see here they're putting pressure on the stock market over there. And the currencies at the same time are trying to gain some, buyers there. You can see we're moving into right here. You see right there. Let's just make that bigger also. You see the algorithm is trying to go into the sell with it right there. And then we go over here. You see the weekly, was in a weekly sell coming in, and all of a sudden it's trying to jump up. So we'll see how long that lasts for the next couple days, if they're going to start to try to push it back into the buy, or if it's going to roll over. And that's how we follow this stuff continuously. We look at these two, and then when all three are lined up correctly, then it's a naked long or short. If it's a producer or a grower or something of that nature, we have a whole different strategy. Not whole different, but if you're a producer, that means you're naturally long all the time. So a lot of times you need to hedge your long and change, and sometimes you let your long run. And that's a big benefit to producers. Our math really helps out producers, be it corn or mining or whatever. All right, now from there we'll go over to let's go over to the great experiment. There's the Turkish lira. I imagine with that spike, the Turkish lira has to be getting pushed up. In other words, it's losing against the euro. Let's put it up on the screen here. And there it is right there. Yeah, you can see that. This is the Euro Turkish Lira pairs trade. You see it closed in a weekly sell last week. And go like that. And you can see that it is trying to climb into the buy today. It's at literally in the plus at 0.0001. So it's just on the edge. We'll put a little square thing on there like that. Just to remind, now it's at 0.0015. So we're starting to get a little action in there. I would, I'm not going to assume. Let's just keep on rolling along here. And that's the Turkish lira. Let's check out the South African rand. Well, the rand looks like, that's why we put that little circly thing, thinking maybe it was a top, bang it up against the stuff. It's a resistance area. Now you can see the weekly still on that weekly buy now for a while. Now we matched the South African rand to the metals complex. So in other words, the metals products, corn, silver, gold, so forth, platinum. So as the South African rand is topping out and gaining, now this is obviously, not obviously, but this is the dollar South African rand or ZAR chart. So what happens is that when it's the dollar you're looking at against it. And so when it's rising, the dollar is gaining against the South African rand. And when, like today, it's dropping, it's the South African rand is gaining against the dollar. So a downwardly move like here is a gain for the South African rand. When it's rising, it's a loss. And so when you see the South African rand start to gain value, you will usually see the metals complex gain value. So let's take a look at that. There's gold this morning. You see gold is trying to lift up. They were pushing it down this morning. It's in a 3-day buy. And you can see it's trying to climb into a weekly buy. It's at 0.28. Now silver today, which was a real nice thing to see, is making a nice move. You know, it went into the buy on Friday. It's still fighting to get into a weekly buy. We've been in that weekly sell since the almost the 34 area, somewhere around in here. So right in this area here. And so you can see this thing has been collapsing, coming down from the 33, 34-ish area, the high 33s really, to down to the 30 area. And then it hesitated for a while, and the holidays came in, and there is the beginning of December, and it started to roll over again, and we've been in a sell. So you would only want to take the sell trades, not the buy trades. Now, if you're a producer, obviously, and you see a daily buy kick in, if you're trying to hedge what you're mining, those couple days you would say, nah, let's not sell the futures yet. Let's let the daily get back into its sell. Maybe you would sell it here, gain some of that. And then the next day, you know, again, we're in a sell, so you kind of want to, I think I want to be short it more as a producer. In this case here, it goes into the buy from that crazy spike, and you know, it lifts for 3 days, and or 4 days, you know, this day, that day, and that. But then it goes back into a sell again, and again, you would, since you're in a weekly sell, you would want to obviously sell some futures again against your production, and you can see how it drops down overall. It makes you a winner chicken dinner, and then it tries to do the same thing again, getting into a buy, giving you a volatility signal here with a green and a red, and then obviously, you know, tries to climb for a couple days. Not a lot, because we're in again a weekly sell now. For what's the chart say? Let's go put it up on the spreadsheet there. So silver has been in a sell for 9 weeks. And so that puts that pressure on it. So you want to kind of take the sells like there, and well, even there, it goes down, starts the day off. If you put your stops in as a long short trader, obviously you would have stopped right there and kept all the profits from these guys. And obviously this one would have taken a little bit away from you. But then when you get your short right there again, and you're in a weekly sell again right there, you know, obviously it's telling you that, you know, this close right here, you would obviously want to play the sell side. And of course, you know, you can see it's another big winner, chicken dinner. Winner, winner, chicken dinner. So, same thing here. Slam dam. All right, now from there we'll go over and take a look at copper, and this may have an effect, obviously, on the China market. I've read some interesting things over the last few days. They're trying to find ways to stimulate the economy. It seems like they may have a plan to get up to as much as 6 trillion won. Again, Doc has an idea looking at EBITDA and currency values and interest rates and all that other stuff and GDP. We believe that they need to spend between 25 and 30 trillion won. And so far they seem to be up to about 6 trillion won over the next 3 years. So that's why the command control economy doesn't exactly do the best job, you know. It's definitely not the best way to do things. And let's take a look at Shanghai this morning. Shanghai, right there. Now Shanghai's been sliding down. Are you seeing this? Let's see here. You'll see it now. There you see, for the last 4 trading days, Shanghai has been finding ways to go down. It's been in a weekly sell for 3 weeks. So, you know, this was definitely a comfortable short. It's dropped over $200 or 200. What is it? Oh, copper. I'm sorry. Copper has dropped. Let's see. So the Shanghai index has dropped from the 3,400 area down to the 3,200 area. So it's a 200-point drop. A lot of pressure on that thing. You know, they're hoping to get that economy going. And then when we go, obviously, back to the copper, you would think, oh, well, maybe the communists will get their game together and figure a way to do some, growth for their economy. I mean, supposedly that's the way it's supposed to work in communism. Oh, what's this? Disney nears deal to merge with Hulu Live into Fubo report. Oh, interesting. So Fubo might be lifting today. I have a friend that's doing the Fubo. He trades Fubo. It's like at $1.50. So I wonder where they have the Fubo today. That'd be interesting to see. Maybe we'll take a look at the Fubo. See what Fubo is looking like. That's a headline in the stock. And everybody believes, they're getting tied into sports, and sports is very popular. In America, everybody likes to bet and play and follow sports like everybody else does around the world. It's a great distraction of life, I guess you could say. It's an entertainment. Fitbit, and then Fubo. There it is right there. See if we get a quote out of it. Okay, so January. So it went into the daily buy 2 days ago, Fubo. So it'll be interesting to see what they're doing with the market there today. Let's see if we can show you that. There's Fubo, for those that like to trade stocks. We went into the daily buy there 2 days ago. It's in a weekly sell. So one thing for sure, if you were shorting this thing, you don't want to be shorted at the moment. You see that sell signal was a real winner. Went from the, what is that? Went from $1.82. It's a very low. I think they've. Let's see what. I can put a bigger chart up, but I think it was up in $10, $11, $12 area at one point, and then the deal died and something like that. And you can see it's fallen from $1.70 basically, all the way down to $1.20. So you're talking about a good third almost taken out of the stock. It's a cheap little stock, but he keeps on selling calls against it. It's not a bad idea. He's been selling calls and he's long the stock, so he's been covering a lot of his losses because he makes some good money on that. All right, so that's the Fubo. It's still up on the screen on one of the financial channels. They're still talking about Fubo. I'm not seeing any quotes on it right now. Surprised they're not giving us any quotes. Pro shares. Let's see if they're lifting it. Let's just shoot over to here. Let's just show you platinum, the last of the metals. It's lifting up also today. Right there with that South African rand. It went into the daily buy last week. We're even flirting with a weekly buy. So we have gold and platinum playing with weekly buys, which to me is like, woo, that's pretty cool. That is very cool. Let's see if I can get a quote on the Fubo. And the answer to that is FUBU to you too. FUBU. What an interesting title there. FUBO. Enter. Oh yeah, it's up $1 almost. So it's trading at $2.33. So let's see. Let's go back to let's go check that out. Right there, and let's get the FUBU up there one more time. It's trading at 233. So it's it's going to be a third day in a buy with the way it's moving now. FUBU to you too. Go FUBU go. Go FUBU go. There we are. Here it comes. So that was Friday's close, and today it's trading way up here. I mean, like way up here in this area here. So it's up 88 cents at the moment. So it's trading at like 90 cents. So it's almost at 230 now, 232, something like that. And we're in a daily buy for 3 days. So one thing's for sure, you're not getting beat up here. You're not selling calls against it, and you're going to catch that beautiful, beautiful ride. Yep. All right. And so, what else we got brewing here? All right, I guess what we'll do now is we'll slide over to the energy sector and call it a day. I guess that's the logic to it all here. Let's see what I want to do here. I'm going to get to there we go. Messages. There we go. Clickety click 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 click. Okay, there we go. Now let's go over to the beta and put up Brent. See what the Brent looks like. There it is right there. There's Brent. And there it is, Brent lifting up again today. We're in weekly buys now for 6 full weeks. It's been something like, was that like 10 days in a daily buy from basically Christmas Eve from the 73.5 area. Today we're up to the 77 area. So it's been a nice move there. Let's take a look at West Texas. There we go. There's Texas T. Doing the same thing, showing lots of strength. Buying, we're at basically $74.40 on that product of West Texas oil versus obviously there's a bigger cost in North Sea. And then maintaining the platforms and that stuff. Then from there we shoot over to Nat Gas. We'll do some Nat Gas. I saw it lifting back up a little bit today. Double check it's not up here. Let's go back down to here. And there's natural gas. And it's been selling off. It's in a daily sell. It's up again today, a little wild and woolly, and it's been in a weekly sell for this whole week. It was in a weekly sell, and it took some money from us. And then it started to push itself back into the sell again. And it's trying to, give us went into the sell here, gave us something there, gave us part of that back already. And we'll see how the next move is. And then from there, we take a look at heating oil. And that's kerosene and diesel and all that. It's all the same product, just certain levels of thickness, I think they call it, but they all burn the same way. And depending on the efficiency, the airplanes use it. And there's heating oil right there. Let's try this again. There we are. There's February. And you can see it's been climbing for the cold weather here in the States. So, nice. And then from there, let's see. All right, let's see what's going on here in the country of Spain. We've seen where the natural gas in Europe was really pushed up, and we've been watching this energy company down in Spain as an idea of what's going on in Europe, and it's been going down. So that's usually a good representation of the energy stocks themselves. All right, traders. What it comes down to is it's time for us to go. So this is Doc from North America. We will catch you all same time, same channel. So happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart trading day.